Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Thursday, August 19th, and I'm Michael Boutros. Good to be with you guys this morning. Jay, Steve, everyone in the room. So we've had an interesting dollar breakout, loving it. We're seeing a turnover in risk, SPX pulling back. We're seeing an interesting move in yields, and it all paints a very provocative picture. So we got a lot to cover today. A quick release just now. We got the release of initial jobless claims in the U.S., 348,000 versus the 363 expected, so slightly better than expected. However, we did get a upward revision to the previous month, so not sure we'll get much play off that. Manufacturing Fed index coming in at 19.4, slightly weaker than expected on that front as well. So we'll watch the dollar here as this data print clears, but welcome to everyone in the room. On the menu for today, we'll hit DXY, Euro, Dollar CAD, Dollar Yen, Gold, Aussie, Kiwi, Crude, SPX, 10-year yields, and Bitcoin actually holding some resistance here. So any other questions or trade setups you guys want to review, as always, feel free to throw them on the message board at any time. Here is what the dollar looks like. Pullback last week, came right into support, right at the 50% retracement. We kind of nudged there for a while. 91.74 sort of a line in the sand as far as bullish invalidation, but we were looking for this rebound or this stretch. Let me take it back to the weekly chart first. The stretch as it was testing 93. Here's 93. We've made 3 weekly attempts above this. We have not closed above it. So it still puts the onus for the resumptive trade for a weekly close in the region we're in now, okay, which is basically northbound of 93. So that's important. The next major lateral level of resistance comes in at 93.76. That hasn't changed, 93.88, okay? You're looking at just the 2016 low week close and the 100% extension from the advance off the low, so 2 equal legs. Gets you right in that nestled region between 93.76, 93.88. The median line is there as well. The median line, which has held resistance, is there. So that's your breakout zone to mark the resumptive move in the dollar. That's really the break you need. Also, we're coming into what? The objective range highs for the year. So here's the high that you registered back in March. We're at that level. Again, it's one of those trades where if you're not already long, you're going to be chasing here. If you are long, you're coming in some pretty interesting levels. Here's what DXY looks like on the daily chart. So from the intraday standpoint, the focus was on this major resistance region between 93.23, 93.40. Okay, we're there right now. The median line held. Again, this was published back on the 15th, rallied right back, and now we are at resistance right at the range highs for the year. Could see a pullback here, could see a little bit of a pause here. If the breakout is legit, you're looking for a close above for resumptive onto the median line or the upper parallel. It gets you right around 93.75 is what I've been like putting on my papers. But the high, or that was the high day reversal close, or the reversal close from back here in the September turnaround, 94.26. So 91, 93.75, 94.26 are sort of the levels on the upside if this breaks. Here's what it looks like on the intraday chart. Real tight, nice break, one directional trade this week. Okay, there wasn't much back and forth. I mean, that thing you got yesterday was pretty much the only thing you saw. Here's what the intraday chart looked like earlier in the week. I cleaned this up. Obviously, we broke this down slope with this move here. And now I'm just working with a basic gradient off the low. Okay, lateral levels haven't changed. It's just this slope we've kind of reaffirmed. So we're here, right? We're here. If we close above 93.40, again, at November high day close, 93.75 and above. Right now, you're looking at divergence into these highs on the intraday chart. So it puts you in one of those scenarios where it's a good time to lighten the load on the exposure, bring up your stops. You should be at break even or better. I'd like a stop at 93 possible. Next level up is 93.80s, 93.75 region and beyond. Any questions on this? There's not much data on tap really for the remainder of the week, guys. So as far as major event risk, you do have a Kaplan speech, Fed's Kaplan talking tomorrow. I mean, you know, these guys are already starting to pad and everyone's starting to see and having to price in possible tapering, right? The taper word isn't such a curse word anymore because the market's starting to pick up steam. You see employment starting to pick up steam and inflation's running hot. So there's definitely that press, right, on Fed officials to really start to normalize or at least scale back on the amazing amounts of easing that's going on. And then you have obviously the fiscal side of things, guys. They're looking at another 5 trillion to dump. So if the time or anything, in my opinion, it'd be nigh here, but I digress. Any questions on the dollar index? We're basically looking for an affirmed cold above like 93.20, 93.40 today, if the breakout still has legs. Keep in mind, it's been a one-way stretch. You're marking divergence, so wouldn't be too surprised to see a pullback. Near-term support right at 93. Bullish inval at the previous high day close we made back here last week. That comes right in line with slope. So 92.80 or 89 or lower, and you're basically risking just a spill right back into the lows. Let me also adjust. Sorry about that. That retracement for you. Here we go. Any questions on DXY? Do this. Take a picture of this. It's the same chart. Here's your weekly open. The 618 and the July open. I'd highlight this. Anything below that, big trouble. Ideally, near term, nothing surpasses 92.89. Looking for stretch above 93.80s. But I do want to highlight that weekly open on the 618. That's a pretty critical region now. All right, so that's DXY. Number one. Here is number two, euro dollar. So the euro with what seems to be sort of a breakdown above or below a key support level, but again, excuse me, it's all about the daily closes. I'm not running after this one. And this is really my problem with calling the DXY breakout. It's what happens here this week with respect to 117. We've been talking about 116.95, 117 for a while. It's a basic 38.2 of last year's rally. It's the objective yearly range lows. It's downtrend support. We've been looking at that region. Really nice rebound there last week. We didn't even close below low we closed. We've now made a new low for the year. We need to close below 116.95 to keep it focused on 116, 116.20. Two equal legs off the high, 2016 high. Swing lows from last year in September and November all line up right here. So momentum at 40. You know, you can't get more hair trigger than this. All things held constant, if we were to continue to slide today and close below 16.95, you're looking for that stretch into 16.10, 16.20. If we close above this and momentum closes above 40 today, that would be problematic. And therein lies in the dilemma between what the DXY is saying and what euro is saying. Remember, 60% almost of the DXY is euro. So I'll be looking at both of these very closely, specifically into the end of the week, but even today, it's important. Look what euro looks like on the daily chart. And here was our last update here on euro. Well, this is the intraday, but here was the daily chart on the 12th. Let me just show you what we look like. Key support, 38.2 retracement, 2021 low. That's from back in March, right? 1694, 1704. Intraday, we register low into 1660s, excuse me, but we're right back here again. Watch today's close. Again, I want to highlight ongoing divergence in momentum. Lower low, lower low, lower low, higher low, higher low, higher low. We'll see today. Here's what it looks like on the intraday. And it really is right about the US Open in the next few hours. That's what I'm looking at, okay? Here's what it looked like. Again, back on the 15th, that was resistance. I've obviously worked the fib for the new low here, but beautiful move right into the start of the week. That held, and we just collapsed straight lower. Here's the low we close. Remember, that was our near-term bullish inval. The break should see a straight shot. If I see a break of something like this, you don't want to see a meander lower. Boy, did we get it. Boy, did we get it. Strong rebound, then collapse. Right back into key support, 1694, 117. Now we broke below today, guys, and we're testing it as resistance. That's why I say over the next 3 hours, basically, we should know if this is legit or not. If Europe comes offline and we're above 17, man, I think that's exhaustion, my humble opinion. In fact, if we take a wave structure here, this could be a 1, 2, 3, 4, 5 already. So I don't want to start piling on the shorts down here, guys. If this closes above, you could see a near-term recovery. Slap on a retracement here. The 618 will line up right about that high week close, and that's where you'd want to fade again. But right now, this resistance needs to hold. Needs to hold if euro is heading lower. And again, the key support on the downside still 116.20 into 116. Any questions on euro? We could also keep in mind, again, just a couple of things. If this slope break is legit, remember, a downside break of descending slope support oftentimes is the sharpest part of the drop. So this break here, testing former support as resistance, if this is real, should see continuation. Anything northbound of 17, like I said, into the European close, I think you risk a little bit of a recovery here. Now, one more slope. I don't want to make this all complicated and messy, but one more slope I was considering earlier today. I was just checking this out, right? If you take just the really near-term descent, the parallel highlights this key zone again. So, and 1760 as sort of your bearish inval. If you break through that, then you're looking for the resumptive move, right? I don't want to work too crazy with this yet, but just an idea, just to give you some reference here. The focus right now is what kind of pivot, if any, we get off this 17 handle into the US Open. Questions on euro? All right. Before I move on, I do want to, well, let me jump, we'll jump into the SPX and rates in a moment. Okay, so that is euro dollar. Next up, here's what CAD looks like. What a breakout. Breakout. So this is one of the strongest performers. Obviously, we noted that we had come off slope support last week into the open of the week. It looked like it was stretching into the median line. I was ideally hoping to add more on a pullback into this parallel or this parallel. Didn't really get it. It's been sort of a straight shot higher. And here's dollar CAD. Right? The weekly open was a straight shot, median line resistance for a couple of hours before we broke, tested it as support. This was my last sort of major target I was looking for. It was 2660. I was telling you guys this on Monday and Tuesday. That break unleashed another rally of some 1% higher still. So let me take a step back. Here's what dollar CAD looks like on the weekly charts, right? Really nice level where we turned off, really nice breakout zone, right back at the high we closed, 2774. This is where we choked out on the July advance, just higher. So if this slope, which again is a parallel of this slope, if that's a break and we clear the high week close for the year, I'm looking for the breakout. The yearly high comes in right near 128.70s. The big zone of resistance, 29.75 into 30.20, right up here. All dependent on what we do at this level. Again, just like euro into the US Open. Here's what it looks like on the daily chart. Okay. This is the high day close from last month. Watch today's close. If we close above that, again, slope and that 28.21 objective high from January comes in at 28.81. So it's one of those trades, again, don't chase. If you're holding them, these are big levels. Yearly high and then the 2021, or excuse me, the slope and then the 2021 high, both levels of interest on the immediate front here. Keep in mind, today's gonna be a fourth consecutive daily rally. Don't jump in this chasing if you're not in already. Here's what the intraday chart looks like. Nothing really new to update here. You know, these stretch trades, you want to get excited about them. And if you've missed the initial thrust, the FOMO starts to settle in. Don't get suckered in, guys. I see your question. Don't get suckered in. I mean, listen, that's part of trading. You're going to miss some, you're going to get some. Chasing the ones that you perceivingly missed is the quickest way to really make a mess of things. So we can never fall into that. into that habit of getting FOMO and just, well, I got to be in it because it's moving. I don't subscribe to that kind of trading. I see the question that you're asking there about the 1618 extension. If you're talking about this, not bad, not bad. You're picking up the trade pretty well, Jay. I love these things that you're pointing out. Man, it gives me so much pride. So proud of you. Good stuff. It's still about the high day close for me on a close basis from July. So I still want to see what we do here on a close basis. But even on the intraday, yeah, that's just the extension 100, which offered, even if as brief as it was, the breakout was accelerated. Yeah, I would pay attention to that 618. Sure. Sure. So that's loony. Now, a lot of people are going to look at this and say, well, if we take a look at crude, Mike, aren't we seeing that sort of corollary play? And we are. Crude broke down, big drop. I do think there's a little more downside to go. We'll go over those levels in a moment, but just to put the theme together, yeah, it's not too surprising, right? To see that crude coming off, CAD sort of losing some steam. That's dollar CAD higher. So we'll hit crude in a moment, but that's dollar CAD. Next up is dollar yen. 3, 4. I've not touched this. Look, we were poised just before this webinar to post another outside day reversal off the highs. Okay, it's already taking a lot back. The support zone, the pivot zone that I've been working with is sort of this zone between 109.50 and 109.70. I really don't have a strong opinion on this one, guys. Let me take the top-down approach. Here's dollar yen from the weekly chart. This is my problem, right? You're not at support, you're not at resistance. Point in fact, you're in a really messy spot from a range standpoint. And so when the weekly chart goes blank, I tend to go blank. So nothing really here kind of screaming operate on something here yet. So here's what the dollar yen looks like on the daily chart. Again, we talked about this earlier in the week. This looked like a breakdown last week. We got an outside reversal off the low, took us back higher. Reversed off the 618, couldn't even get a close above that. In fact, it was a touch, perfect kiss. 110.52 before turning lower. All right, fine, we're looking lower. Then the breakdown once again, faltering at that median line. Next day, inside reversal candle. And then we get this. Look, we're mid-range for the last 3 days. I don't want to mess with this thing. All things held constant, this is a huge pivot. Not only because of the 618 retracement of the monthly range, not only because of the 2019 objective yearly open, but it's also this month's objective monthly open. It's also the 100-day moving average. All of it is right here. And we've been straddling it. So dollar yen's being an abomination. I don't want to press this thing. Here's what the intraday chart looks like. You know what I mean? I was telling you guys earlier in the week to see if we get some sort of buckle below 109.7. That was my line in the sand, the 618, the June low. Obviously, that was the low that we registered back in July here. Quick break, never closed below, and here we are again. So we're unchanged on the week. We're sitting at the monthly open. We're sitting at the 100-day moving average. We're sitting at what looks like upslope support. Neutral on dollar yen, guys. Neutral on dollar yen. Pistol to my head, I think you get a rebound, then it actually moves lower. But if market sentiment really accelerates lower, you know, we could see yen and dollar catch a bid, which would keep this thing again in this really horrible, just like sideways expansionary range. So I'll leave the abomination here. All due respect, I'm sure we'll get some clarity on the price action as we get through the week. But from here, there's not much to write home about. So that's dollar yen. Quick brief touch on that. Now let's hit the other update from that report, which was gold. So gold's been sort of a snoozer. Again, here's dollar yen from earlier in the week, guys. That was support right there. We rallied through 109.96, which for me was a breakout, but right back below. So neutral on this. Here's the gold setup. So we started off the week. You guys have all seen this monthly chart many, many times, this weekly chart. What 1825 is sort of a line in the sand. Big resistance initially was 18 into 1795. The 2012 Open, the 786 retracement, former slope support turned resistance. The monthly opens at 1814. So both areas of which we were looking for possible exhaustion on this pump higher in gold. Here's what it looks like on the weekly chart. Very clean. Nice response to key support. Has still been on the upswing. Here's gold on the daily charts. Right into that 1795 18 handle. The high registered at 1795, right on point. Right into that level. And here we are for the pullback. The last 3 days have been blah. You know what I'm saying? I wish there was more. I do think there's still the initial threat for a little bit of a weaker pullback here. It's interesting that gold has held its ground despite rampant dollar strength, seemingly. Right? This is the daily chart. Here's the daily chart of the dollar. Here's the daily chart of gold. So despite real strong dollar strength the last 3 days, gold has held its ground. That tells you something. That tells you something. So here's what the intraday chart looks like for gold. And here's what it looked like earlier in the week. We were just looking for a break of this formation if it was going to pull back, but really the focus was on the advance into that spot. So we got the advance into that 1795, 1799 spot. Ever since then, boring, right? We're sitting on the weekly open. We're sitting on slope support. You know, we're fractionally higher on the week. So snooze fest on gold. I think you do get a breakout which way or another here. I'm still constructive above 1760. A break here, and you're looking for 1825. That's a big level. That's a big level. But certainly just the risk is as you stretch into this 18 handle, maybe you get a little bit of an exhaustion pullback before resumption. Questions on gold? That's number 5. All right, let's hit the com block, shall we? Aussie. Well, big support has finally given out. We've been talking about this support level for literally 5 weeks. It's 72.80 into 73.28. 73.28 really being the more critical level. That was the objective swing low from the May 2017 drop. It was a very nice pivot in price over the last couple of years, and it converged over the last 5 weeks on this major support zone. Hey, Mike, sorry I joined late. Not sure. Have you covered SPX? Rohan, not yet. I'll definitely hit SPX right after we get through these comms. I got you. But this is such a brilliant zone, and I'm happy that the break has yielded this move, because if this had meandered lower, it really would have gotten me. We've been talking about this zone for weeks. It's so critical. As I always tell you guys, when you see the breaks of major support, you want to see a run lower. You want to see an acceleration higher, and this is what we are getting. So the weekly chart highlights 71.20.21. 71.21 is the 1618, extension of the decline off the highs. Next major level of support is right into 70, right? 70.16 to 70.15, huge. 38.2, 2019 open, 2020 open, major pivot in price, just absolutely key. So both of your levels on the downside are well defined here. Initial resistance on the weekly chart back at 72.80, bearish invalidation right back at 73.28. Here's Aussie on the daily chart. A break of downtrend support, typically the sharpest part of the decline, checkmate, right? We had a soft target at 72. That was a 786 of the drop. Here's that 1618, again, 7120, and key support, 7016, 7040. This week's break also marks a break of what? And why was this level so well defined? If you're holding on to these guys, I would just be fading out and bringing your stops. I wouldn't necessarily want to close it too early, because 71.26 isn't too far away. 71.20 rather isn't too far away. But you'll want to see basically like 72 hole resistance. I'll show you the intraday chart in a moment. But why was 73.28 so important? Besides what we highlight on the weekly chart, it's also this month's open and this month's opening range low. So objectively on this break for the 17th, we should be looking for a late month low. Looking pretty good. looking pretty good. Here's Aussie on the intraday charts and our last update here from the 17th. So there was the break, okay? 786 retracement, soft target here at 72. There's 71.25, right on point, right on point. No change to any of those levels. So I would have bearish invalidation per your question there at 72.80, but the technical case for a bull would be a break above 73.28 again. It's got to be that same level. You know what I mean? That was so critical for us that unfortunately it's a little bit far. You don't want a bearish invalidation that far, but you know, I'd work with this as bearish inval, but this is really kind of what you would essentially need to validate sort of a bull trend again. But boy, the risk is lower, man. Anyway, slice it from here. So that is Aussie. Any questions on Aussie dollar? Defense the 23%. Well, now we can see 38.2. Jay, I don't get your question. 38.2 of what? Of a pullback of this stretch, you mean? So like the recovery? So if you're talking about like this initial decline, 38.2 gets you like 72.34. Could be. I really wouldn't be so stringent on something like that because you're not really working with a concerted high. You're talking about the weekly chart. So if you go back far enough, yes, 70.50 is the weekly chart. I see what you're saying. Jay, so I use these congruently, but on the intraday basis, this is what we want to use for validation of breaks of trend or not. So even though it's a target here on the weekly chart, this is all for the weekly closes, right? Intra-week, intraday, you're basically looking at this same level, 70.50, 70.42. I mean, it's 10 pips off. So you know what? Let's keep Jay something like that. Rohan says, you have indicated 73.28 as the break point for weeks. Did you catch it? So I was, on these kinds of moves, every time it rallies into resistance, you're taking a little on, and then as we get into support, you're taking a little off and leaving it. Break even on the stop. So on this one, I've taken like, I don't even know how many. Many of these pullbacks, half off, got break even. Pullback, half off, got break even. So on this one, I only had like a half of the position on. So it happened so quick. Yeah, Rohan, for these kind of moves, man, you want to be pre-positioned, but that doesn't mean you want to front run the break, right? You still want to be in a position that favors the break, but that position needs to have merit. So I don't want to mislead anyone here, guys. It's not because we were looking for a break, we're just selling every bounce. No, every bounce that was sold was based on its own merit. So a short here, tight stop against the high. Even if you took a short here, it's a pretty tight stop against the high, a 20 pip stop. But that's the point, right? You're taking a trade of its own merits, and then if the break happens, you have a little left on the table. Now, you guys know that as we first entered here on the rebound, I was looking for the recovery. I thought this was going to give some much stronger rebound. But as we failed into the start of this month and slammed lower, that sort of scenario faltered big time. Momentum couldn't even make it into 50 on a daily chart. That's like super bearish. So long live the dollar, making a move finally. I thought, again, same thing on the dollar index, was looking for a pullback to get better positioning. I wasn't positioned for this as I wanted to be, Rohan, but the market will always provide. There'll be more. Make sense? Any questions here on Aussie? Kiwi, number 7. I didn't have any positioning on this one. Again, kind of wish I did, but guys, this whole, again, I don't want to get political. This whole story with New Zealand kind of still has me scratching my head. So they're closing down the whole country for 3 days, which I don't know what 3 days necessarily would is trying to affect, but that's neither here or there. But it's basically over like a single COVID case or something. So look, that came out. Then all of a sudden, you get indications that the RBA is expected to like the rate increases are like they're nil now all of a sudden, and the expectations for a rate hike just collapsed. So that further fueled the downside. Rohan saying Sydney scared. I mean, Australia's a whole different ballgame. I think Australia's scaring a lot of people, not just Australians, or New Zealand's, but the drop has been really precipitous, right? And this was, again, very similar to Aussie in that it did break the monthly open and the monthly opening range lows a few days ago. That keeps the focus lower. We're now back at a key support zone, and that's what bothers me. So we can scratch this, we can scratch this retracement. That's still sort of null and void right now. I keep things clean. The May 2017 low, which you can see, again, has been a decent pivot in price. I wouldn't call it sort of earth-shattering, but certainly over the last couple of years, it's been a very decent pivot in price. More importantly, the 100 off the high, if this whole thing is corrective, that's basically giving me 67.95 into 68.18. We bottomed right in there. So while the downside break of the monthly range keeps the focus lower towards the end of the month, while we are at fresh yearly lows now, right? We broke the yearly range lows. I do want to be mindful to this support zone, and I'm not chasing Kiwi any lower from here. I didn't even get a piece of this, but I wouldn't be chasing Kiwi any lower from here at this point. Here's what the intraday chart looks like again. I'd be willing to kind of scratch this slope. Again, a downside break of descending channel support kind of keeps the focus on this key support zone. I wouldn't want to get cute beyond that unless this breaks. A close below 67.95 is what you need to unleash the next leg, and then you're basically looking for 67. So some things to keep in mind here on Kiwi. By the way, here's Kiwi on the weekly chart. I never showed you that. There's 67.95. And actually, let me just give you a parallel here. Might be worth keeping. All right, so that's Kiwi. Next, crude. Was that you? Oh, you're asking about SPX. I'll hit SPX next. Last one on the commodity block here, real quick, is number 8, crude oil. Boy, what a huge support break. I mean, it's huge. The level was 66.57 into the 2018 low. We close here at August 65.92. So basically like 66 and 66.57. Tested it back here in July, tested it back here again last week, closed above. Here's the break. So validates the break of uptrend support. It validates the break below a major lateral pivot in price. Again, I do have to highlight that we need to see a weekly close, but all things held constant, we've driven down pretty hard. Next levels of interest, 62.32. It's 100 off the high. And 59.16 is the objective 2020 high week close. Not Mike Boutros' opinion, not SB's opinion or Jamie's opinion, fact. So both levels of which I am really very interested to see more of a concerted sort of response, inflection, rebound, or breakthrough. But I don't want to see price sort of sit there for too long. Really nice triggers, guys. The trade panned out. This is your first level of problematic support. Here's what crude looks like on the daily charts. Basic slope support, nothing too crazy. It's only a 2-point touch just off the March-April lows. Also gives you a slope right around there, right? There's the 100% extension. It's been a 6 days now. So it'll be a 6-day decline. Watch 62.32 for support. Momentum right at 30. Right at 30. How would you possibly enter? How would the possible entry look? Wait for support to show up and then long with a stop against the support level highlighted? Yes, Rohan. So if you're talking about trading the turn, that's exactly how I do it. See something like this? You see that confluence support? So guys, let me just show you this because I know this chart probably had some of you scratching your head earlier this week, but I wanted to highlight both of these scenarios. So here's Kiwi, no change to that. We're basically all down here. Here's crude. I wanted to highlight both of these slopes because we were at such a major support pivot, and I kept on highlighting, guys, this is such critical support that if it holds, these are your targets on the upslope. If it breaks, here's your very objective targets on the downslope. Guess what? That downslope held for another day and a half before, boom, breaking down. So even though this was a super short-lived slope, even that did give you a little bit of a tell there. So now that that's done, null and void, here's what we've been looking at with the crude decline. 65.43, 63.84 already taken out. Next major support zone, again, 62.32, 100 off the high. That's right down here. Just lower 61.54. I believe that was a swing low from, what was that, in May? May. Okay, the late May swing low. No, I stand corrected. It was the May swing low. Let me just put that there. And that's like 61.54. But really, I'd be paying a lot more attention down here if we get that break. Near-term resistance 63.85. Bearish inval now drops into this zone here. The same key zone we were just talking about, the entire start into the week, that's bearish invalidation. Resistance, next support zone. So Rohan, as per your question, yeah, so how I would look to trade this. So if I was looking to trade the rebound and I thought maybe 62.32 was going to give us a decent recovery, maybe you saw the divergence get more radical as you get into that low. Once you strike that low, if you get a close back above, again, I'm giving you ideal scenarios here, but if we were to spike below and close back above, that next candle, yeah, if you're getting a decent signal on the near-term charts, a stop against whatever low was registered, Rohan, not necessarily the level that we highlight, the low in price is what you want to take the stop against and look to play the recovery towards 63.85 or maybe even 65.40. But you know, at this point, I would actually, let me just clean this up for you in a second. Forget that. That's near-term resistance. All right, 65. Rohan, does that make sense? Yep, thought I just wanted to confirm. Absolutely, you're in the right place. All right, so that's crude. Big support break. It tumbled. I still think 62.32 is a level you want to keep an eye on. It's bearish below 65.57. Here is what the SPX looks like, Rohan, and then we'll jump. Well, here's the SPX, first of all. Again, one of those trades where it's kind of ridiculous how well it worked. But let's just show you really quick before we hit this. I want to show you what the 10-year is doing. So this is pretty radical. Forget this right now. Just look on the right. This is guys, this is the same chart I've been showing you month in, month out. Nothing's changed. Once we made that outside reversal off the low, we added this pitchfork. And what did that pitchfork highlight? 113.75 is resistance. 2 days spent up there. Failure. Plummeted into 618 support. Uptrend support. Monthly open support 24.30 into 22.20. I'm sorry, not 24. That's our current rate. The monthly open is 23.70. That sounds more accurate. 23.70 into 22.20. So we're there right now. Okay, and this is why for me, I think it's an important day on all fronts because we'll have all these trades that have stretched in some pretty critical levels and risk, despite all the gyrations you got this week. The 10-year's been ping pong. Support, resistance, support, resistance, support, resistance. 128, 122 is support. So we're looking for a breakout of this near-term range. If we close above 28, yeah, I do think you risk, you know, sort of resumptive move right back towards, you know, 37 and above. But that's been a pretty decent pivot. We're still holding it. Major key support 122.22 right now. Keep an eye on that. Here's what the intraday chart looks like. What I don't like about this is that it broke the upside, okay, of this descending slope, but then we gapped back into it. Here was yesterday. Here's the gap back into it. I'm more inclined to scratch this at this point, okay, just for the sake of clarity, and work on the same exact levels. Your 38.2 as your breakout zone. Oh, let me just adjust that. Sorry about that. I knew something looked off. sort of this region here, you need a break below 2220 to go for a gut check towards support, towards uptrend support, towards those swing lows that we made. But it's all determined on this immediate range. So risk sentiment itself is hanging on by a thread here. SPX looks like this. So first, the daily chart. Again, you can't make this stuff up. I mean, it teetered out at an interesting spot. I wouldn't want to say we turned off of uptrend support, but if you look at the intraday chart, we were at near-term trend support, and I'll show you that in a moment. But guys, this daily chart's all derived from this slope. All of these parallels are from that one slope. Support, support, we're there now. An extending parallel of the same slope extending off that low from March, maybe a little lower. Stop traffic, the 618 of the advance off the July lows right there. So my line in the sand is 43.30, 43.29. If this breaks on a closed basis, you're begging for a test of the 100-day moving average, a basic 236 of the advance, right? All of this, I'm sorry guys, these retracements are kind of dated. So basic 236 would still give you into that. I wouldn't even go searching for that. 38.2 would be my move, and the May high day or the May high, which converges on that 100-day moving average, something like this. All right, that's all to say, guys. 43.29 becomes absolutely significant support for SPX over the next 2 days. That's my line in the sand. That's also the reversal day close we made in July after that 4-day spill right here. Support and the 618. So the intraday chart looks like this. Yep. So let me zoom this out to the 240. Here's the 4-hour. All right, so this is a modified pitchfork. We haven't changed this in literally like over 2 months. Here's what it looks like back in May. High, low, high, low, high, low. And that's the modified pitchfork we've been working with ever since. This is the 138.2. Okay, so another fib ratio there of the slope. Resistance, a little bit of a breakout here. Resistance, perfect resistance before turning lower this week. Here's slope support. Here's key support at 43.29. Questions on SPX? So wait for the day or week end at 43.29. So Rohan, that level is significant in price and time over the next few days. Does that make sense? So yeah, I'm looking for inflection off of 43.29 if reached, right? If you're holding shorts, that's where you want to close up the table. If you're looking for new positioning, that's where you're looking for inflection. It might be a low that gives you a bit of a charge higher, but we're not looking for resumption yet. We would need a confirmation of that. But all things held constant, the downside looks exhausting, or it looks tired, the risk for exhaustion into 43.29. Does that make sense? Yeah, let's see provides inflection. Exactly, exactly. And keep in mind this, guys. There's a lot of geopolitical risk out there. There's a lot of headline risk, whether it's the fiscal aid package, whether that gets passed, whether it's what's going on, the tragedy that's unfolding in Afghanistan, or any of that. If it buckles below on some sort of catalyst, I would expect this decline to be very sharp. That's how important 43.29 is for me, on account of not only level and price, but slope and time. All right. Last but not least, can't go anywhere without talking about Bitcoin. Can't go anywhere without talking about Bitcoin. So got a little higher than I thought. If you guys recall, a couple of weeks ago, that Business Insider piece, we were talking about 45,000 and change. We made it higher, right? Almost above 48,000 before turning lower. And the 2018 parallel now becomes sort of the make or break. Okay. If the parallel is proper, and our sort of assumption that this rally needs in this sort of multi-week exhaustion swing lower, then you're basically looking for a hold below the 200-day moving average. You're looking for a move towards 41,929. You're looking for a move possibly sub 40, but that would be the extent of it. Both of these regions would be areas of interest for possible exhaustion for the downside. But the rally, certainly on a third again, don't take my word for anything. Here's the divergence: higher high, higher high, higher high, lower high, lower high, lower high. We're now trading below the median line, back below the 200-day moving average. You know, I don't know if he told you guys about this, but Tom Lee, who we've had a relationship or we've met before, was on CNBC talking about, you know, anytime that Bitcoin breaks 200-day moving average, it's always, you know, 60% rally or some radical move. That may be the case, but I don't take that with, you know, I don't operate on that kind of expectation, because well, it's just a stretch trade. Okay, I don't take, guys, anyway, anytime someone's telling you, anytime you see this technical move do this and they draw a circle around it, it's always going to be Y. X will always equal Y. It's just usually not the case. Okay, markets don't work like that. It's not a linear trade. Now, again, I might be eating my words and we could be at 51,000 tomorrow. I don't know. But what I do know is that this is key support in price, and again, and in time. And on the upside, initial resistance, 49,128. Key resistance, 51,000. Now, on account of the uptrend resistance, on account of the divergence, on account of the fact that we buckled back below the 200-day moving average, if the pullback is going to materialize, again, even the near-term charts look pretty clean, right? Support, bullish inval, resistance, key resistance. Trade accordingly. Okay, well, my friends, that's all I've got. Let me know if you have any other trade setups or questions specifically you'd like to address. Otherwise, we'll wrap it up there. We really don't have much event risk on tap. Like I said, guys, it's really light. So the sentiment catalyst that we would essentially look for as we make these stretches, I don't necessarily think we're going to get it from the data front. So we really need to be focused on near-term price action and how today responds on some of these major stretches. Again, Euro, oh, wrong series of charts, but again, Euro sort of scratching this low. Got to see what happens on support 1695 into the open of US trade today, guys, on the DXY. Remember 93.40 as resistance. I didn't go over with you sterling, guys. I did want to take a moment right now and touch on this. Rohan, the Dow, I don't have any levels for the Dow, but I'll see what I can find for you. Sterling, there's a reason I haven't covered this, and it's because it's been so aggravating for me, and it's not because I had a losing trade, it's because I've missed the whole darn thing. And I always tell you guys, you know, the markets will provide not to get pissed, but, you know, sometimes it's just really aggravating. So it's just me being too meticulous. We rallied into this, guys, last week, or earlier last month, and we failed into 39.99. We've been talking about 39.99 for a while, ever since the drop down into the Brexit gap. The week after was null. The week after was null. Last week was pitiful. Here was the final reaction, right back at support, 36.75. So look for this weekly close. Again, since the breakout, we have not made a single weekly close below 36.75. And if we do that this week, it'll be, you know, a first. Just below 36.10, that's the 100-day moving average. Or I'm sorry, this is the 52-week moving average. And then obviously the 2017 high, we close at 34.94. But as far as the sterling drop is concerned, I mean, it's the first level already. I don't know, I'm not gonna chase this. Here's that Brexit gap at 36.75, major pivot zone. The 2021 objective yearly open comes in at 36.46, just lower. So if you're holding it, kudos on you, good on you. You did better than I did on this one. It's been a tough trade to kind of pull the trigger because, again, we never got the exhaustion trade, and every single pump higher has been really pitiful. So I don't begrudge anyone who missed this with me, but if you were looking for something this week into the close, look for a pivot along this near-term zone at 36.46 into 36.75. Now, Rohan, for the Dow, you're talking about US 30. I haven't updated this chart in a few months, so bear with me. Let's see where we're at. Okay, so if we're to mirror sort of the same slope function that we were looking at with the SPX, in my opinion, it'd be something like this. This thing's riding that 100-day moving average. We broke below. Okay, so you try to get some, this is a good drill actually. You kind of try to get just some clarity on where we are in trend. Here's your monthly open. So you set a monthly opening range, right? You test the high. Here's your monthly open. You break below the monthly open and the monthly range lows. Actually does give you a downside bias, basically heading towards the latter part of the month. Now the key support zone for this isn't too far away. Like I said, that 100-day moving average, that slope support, basically near 34.40s, a little bit lower. Try to get some slope on something like this usually will be very beneficial. I don't know if this will look like anything, but let's take a look. Not bad. And what is this, the June low? Okay. So some levels to consider. Again, I'm doing this on the fly, Rohan. I don't actively trade the Dow, but we're always down for a look at some interesting price action. Here's your 50 converging on slope, which is right about the same spot we're looking at here, maybe a little bit lower. And then key support would be the 618. This would be your breakdown zone. Anything below that, you're basically risking a major washout of the entire uptrend from the yearly uptrend, essentially. Right? So looking on both of these, same thing with the SPX. I think the downside is exhausting. You want to look for support, maybe just a little bit lower from where we are now, but looking for inflection here. Does that help? Rohan says, yes, that helped. Right on. You're more than welcome, sir. More than welcome. Let me bring that chart back again right here. Don't even mind this 38.2, by the way. It's just noise. Keep that. All right, so we'll wrap it up there. Guys, thanks so much. Rohan, Steve, Jay, everyone in the room, welcome as always. See you guys on Monday for the free session on Daily FX, and then right back here on SB Trade Desk on Tuesday and Thursday. Have a great weekend, guys. Stay nimble. If you're in some of these trades, I would, again, ease up a little bit on this stretch. Cover some, bring your stops all in, make sure you're at break even or better, because if this thing doubles back into the end of the week, we don't want to get caught on the wrong foot. Cheers, Rohan. Jay, have a good one, guys. Cheers.